Why do you think we see the NASDAQ hitting again post-earnings new high?
Yeah, it's interesting, isn't it? There's a lot of cross currents hitting markets right now. And I think really what's happening is there's just a couple of things that are going on in the background with markets. One is, regardless of what you think about the current trends in economies and earnings, the market is taking the view that these things are temporary, that this will pass eventually, maybe over the next few months. But the other thing that's happening is that discount rates, the risk-free rate, they're seeing that as being more permanently low. So you're getting lower discount rates, but a temporary hit to earnings, which means that that is pushing markets up. And then when you take it to the tech companies, and these tech companies have very long-lived revenues, so they're what we call growth companies, and they're what we call long-duration stocks, and they're getting an even bigger benefit from the fact that these risk-free rates are falling.
Good morning, Andrew. When you put all the tech companies together, the market cap is astonishing. It actually could be as big as the world's third biggest economy, coming after America and China. If you strip out technology, what is going to help drive this market? What do you like? What looks good?
Yeah, it really is. It's the tech giants versus the rest, isn't it? And particularly in the US market right now, it's the big six versus the other 494, which still haven't made gains for 2020. But I think looking forward, you've got to step back a bit from the daily noise and think about where are we in the cycle right now. The cycle is actually very risk asset positive because we've got lots of stimulus, lots of potential for low inflationary, low interest rate growth, which is traditionally good for riskier assets like equities. What I think we're going to see over the next 12 months potentially is a rotation. So a rotation away from big tech towards more cyclical value type companies and markets, which means a rotation away from US leadership towards maybe for the first time in a decade seeing non-US markets start to be the best performers.